Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing an important update about the economy and the investment market so you can understand what we see in the global landscape. Well, the correction, the volatility that started, let's say about 2 weeks ago, is well off its lows on the bottom. In fact, from the lows, we're probably off about 3 to 4 percentage points back up a little bit from the recent volatility. We're still seeing short-term volatility, and as I would explain to every investor, expect more volatility in the upcoming months. We're still waiting to see if the Fed's going to raise interest rates a quarter point or less sometime in the middle of September. So essentially about another week to go or so for Janet Yellen. I would like to see them raise rates slowly. We have a stronger or getting stronger economy in the U.S. Europe seems to be on the mend, and so does Japan. Overall, the world economies are growing. Slower pace than what you've seen in past years, but generally speaking, things are getting better. In the U.S., the economy clearly is on a good footing. We're seeing unemployment rates again getting better, wage growth, we're seeing auto sales, we're seeing retail sales, we're seeing manufacturing, a lot of things that are going on for positive GDP growth. We're seeing good things in the U.S. In fact, we saw revised GDP growth for the second quarter up to 3.7%. Again, all net positives. Short-term volatility is going to be here. Expect it. It's always been here, although in my opinion, I think we may see some heightened volatility. Again, this is why an investor cannot be a 1 month or 1 quarter investor or even a 1 year investor. Regardless if you're 60, you're 80, or you're 20, if you're not a 3 to 5 year minimum investor, and again, let me explain. If you need income, some of your money's in more conservative parts of the portfolio. But if less you're going to spend all of your money in 3 to 5 years, you're a long-term investor. So if you have $1 million portfolio and over, let's say, the next 3 years, you need an average of $40,000 or $50,000 out of your portfolio, the majority of your portfolio is long-term in nature, meaning you need to generate income for your retirement purposes, but the majority is there to grow for future income and growth for inflation purposes. Nobody likes short-term volatility, and I'll be the first one to tell you, expect volatility because it's always been here. It's always going to be here. We don't see any signs currently of recession. We've had this 10% or so correction that I talked about, and we actually think this is a positive net for the overall investing class person. You wring out the weak hands, the nervous people. Again, nobody likes things ever to go down, even in the short term, but if you're a 1 week, 1 month, 1 quarter, or 1 year investor, you probably shouldn't be invested anyway because you're going to do the exact wrong thing at the exact, wrong time. If you're clients of our firm and you have any questions whatsoever about your portfolio, please call me. Let's discuss. If you're not a client of our firm and you want to become a client, call our office for a consultation. Again, we look for prosperity. We look for upside potential in the economy as the weeks, months, and quarters come through 2015. I firmly believe we are in good, stable footing in the U.S. and things are getting slowly better. But of course, short-term volatility is going to be here. Make sure you have yourself a safe and profitable day.